that. Let me get to Gordon Fellows. Gordon was president of Mississippi Bankers Association, and it's I'm sure been kind of an unexpected and a busy week for you. But how are you, sir? Thank you for joining us.
Yeah, Paul, I'm doing well. Happy St. Patrick's Day, and thanks for having me on. It has been a long week. Feels like it's been Friday every day this week, so thank goodness it is finally here, right?
Yes, and we need the weekend, but your analysis of it now, are we over the contagious part of this, the contagions, as she says, are we, you think we're past that right now and people are kind of settling in and saying, okay, we understand some of the parameters, we understand how these guys screwed up, we understand how it also affected some of the other banks on the outside area, Signature, and now there are several others. But we feel confident in our bank, especially in the smaller banks. What's your analysis, Gordon?
Yeah, well, thanks for that. It's a complex situation, right? But I think that the SVB, the Silicon Valley Bank issue, was really idiosyncratic, right? This is a very poorly managed bank. They had an asset concentration of more than 90% in one sector. That would never happen in a Mississippi bank. Frankly, I think this was a poorly regulated bank, right?
We know that. Let me ask you real quickly, do you have your speaker on in that one? You're getting some feedback, and I think it's a little distracting. You may have a speaker on or earphones in or something, but just double check on that.
It's just
there you go.
Turn it down a little bit. Maybe that'll help.
I think that's good. Okay, go ahead, sir.
Okay. Yeah, so I think it's very much an idiosyncratic event. A bank that was poorly managed, had clearly some regulatory oversight issues. The regulators missed some stuff. And it's important to realize, too, right, there are 4,500 banks in America. Most of them are state chartered banks, right? In Mississippi, our banks are almost all chartered by the state of Mississippi. Our largest institutions, Hancock Whitney, Cadence Bank, Renaissance Bank, are all state charter banks. Trustmark is national, but those other banks are state chartered, and our smallest institutions, the Bank of Benoit, where you're from, right, is also a state chartered institution. And so our state regulator would never allow a Mississippi bank to get so concentrated in one sector of customers. So that concentration risk was just wide open, and I don't know how the regulators missed that. That just isn't a problem here, right? So your question, has the contagion spread stopped? I certainly hope so. I certainly think it's limited to the innovation economy, banks that are highly tied into technology. That seems to be where the problem is right now. And our banks are well diversified in terms of their customer base. Our deposits in Mississippi are very sticky. They don't move around much. And so liquidity isn't a problem the way it is in other states. And I think it's important for Mississippians to remember, right, the FDIC has now been in existence for almost 90 years. The FDIC insurance limit is $250,000. No cent of any dollar or quarter or penny that's ever been put in an FDIC insured account has ever been lost in a bank failure, right? So it is literally the safest place money can be. And if you're a Mississippian individual, you really ought to look closely, talk to your banker about are you maximizing your exposure to the FDIC insurance products they offer. If you're a corporate account, if you're a business, talk to your banker. They have lots of tools to use to help stack FDIC insurance on top of that initial $250 level for corporate accounts.
Gordon, prior to this, before the SVB went under, was there any indication? I mean, you're looking at the market situation. You are looking at the interest rates staying historically low for a long, long time, when politically maybe they should have gone up earlier. Was there any indication of this? Maybe not for banks here, but just that the banking industry was falling out of favor a little bit, or having some problems and weakness.
Well, the interest rate part of this story is an important part, right? And rates were so low for so long, and then they just shot up almost in a straight line. The slope at which the interest rates have increased over the last 18 months is the highest slope that in modern times, right? We've had higher rates before, but the speed of increase is significantly different than what we've experienced before. And so you could see that coming, right? We've been talking with our members since last summer, June and July. Are you thinking about your liquidity? Are you paying attention to the rate increases and what that might do to A, your investments, and B, what you have to do to maintain your deposit base? You're going to probably have to start paying more, for CDs and for deposit products. And so, since the summer, we've been working through together those issues. And back to the point of the regulator, we've talked to the state commissioner of banking about this liquidity situation and related to interest rates for months, right? And we've had several conversations with the commissioner, the state regulators, with the Fed and the FDIC and our members about, how do you ensure if interest rates continue to climb that you're well positioned to absorb those shocks? And I think our members are. They've been planning for it. I don't know how they didn't in California. It's mind blowing.
Trying to explain this to most people, I think I used an example. Let's just say you were lucky enough to win $5 million in the lottery. You haven't been at that level above the $250,000 to worry about. You get that $5 million. It's a one-time deal. You want to hold on to it. You want to grow that $5 million. Banks are in the business of money. And that's their product, to make more money and to invest it the right way. So you got $5 million. How do you want to grow that above and beyond the taxes and everything else? And that was the problem. People are looking for the best way, and the interest rates were not those. They were so low.
Yeah, that's right. And just like that individual investor, he's smart when he diversifies his investment portfolio, right? You want to keep some of it in an insured account with a bank. You probably want to put some of it in some bonds. You want to put some of it in some equities. The banks manage their portfolio the same way. You diversify, so you spread the risk out, right? One thing that in that scenario you can ask for, right? If let's say somebody in Mississippi wins the lottery this week and they now have $500,000 instead of $250,000 or $1 million instead of $250,000, you can go to your bank and ask for what's called a reciprocal deposit or an insured cash sweep. And those programs have been around for forever. And they allow banks to join a network of other banks and to take that percentage of or that amount of money above the insurance amount and spread it out over all the other banks that are in the network. So you as a depositor can fully insure your $5 million through that reciprocal deposit program and only have to go to one bank, right? You're just dealing with one point of contact. And those other banks spread large deposits around the other banks in the network. So it's a really good tool. We've seen a lot of customers restructure their deposits into those type of tools this week. That insured cash sweep, the reciprocal deposit program is more of a long-term hold money program. The insured cash sweep is an overnight program that does the same thing. So both of those products have gotten a lot of use this week.
There's a couple of stories here. A group of major U.S. banks have reached an agreement to help First Republic Bank stave off collapse by making major deposits to help them keep afloat. Here we go again. A group of 11 banks. It was Goldman Sachs, Wells Fargo, Morgan Stanley, J.P. Morgan, Citigroup, and Bank of America, depositing a total of $30 billion, according to Bloomberg this morning. First Republic appears to have narrowly averted a total collapse after its stock fell by roughly two-thirds in the wake of failures at Silicon Valley Bank and also Signature Banks. So isn't it going above and beyond? Well, we understand if you're weak by making bad investments like SVB, the market's going to take you under. But even banks that are, not as weak as SVB are having to watch what they do now. So how are they are they going to change the method on how they take deposits or what they do? We'll answer that when we come back. Kevin O'Leary said one of the things he's doing, and you were right. We played a cut yesterday, and O'Leary said that he's not going to have 20% of any amount of money in any bank. He's going to spread that out. So maybe one of the changes that's going to happen with people at that level of Fortune 500 companies and more. So we'll see. Gordon Fellows, President of Mississippi Bankers Association, will continue with that insight on that one. You got some questions, you could shoot them to me at the C Spire text line 601 877-879-4395. Back with more next.
Okay.
Happy St. Patty's Day to you, my friends, live from the Trustmark studios. And Trustmark provides proven financial advice through every phase of life. A bank that fits is a beautiful thing, member FDIC. And ironically, we're speaking about banking to Gordon Fellows, the president of Mississippi Bankers Association. Perez, anything you want to mention here? Were you trying to get in?
No, I'm just
all right.
Go on. I want to know more about banking.
All right, I do want to ask this. The Treasury Secretary Janet Yellen was testifying yesterday. I forgot what time it was, but she was testifying before the Senate committee on the Senate Finance Committee, and she said we could see the credit become more expensive and less available. She said that could turn this into a source of significant downsize as far as economic risk is concerned. Anytime we see something like this, my question is, how is this going to affect maybe somebody who's trying to buy a house right now? Is that going to cause some problems?
Well, in the short term, the interest rates went down this week. I'm sorry, the rates you pay to borrow for a mortgage, a 30-year fixed rate, went down this week for the first time in a while. So in the immediate term, it's probably going to be helpful. Now, there are, Paul, we've talked about this before, right? When we shut the economy down completely during the pandemic, and then we threw all this money out there, right?
Yeah.
That was dropping a huge boulder in a lake, and there's just going to be ripples for a long time. And this is one of those ripples. And we kind of just dropped another boulder in the lake, and we're going to add more ripples, I think. So the foresight of your question is a good one. I don't know how that's going to play out in terms of mortgage rates in the long term. I'm not sure. One thing that Secretary Yellen did say yesterday too is, and I think this is important. She reminded everybody that the U.S. banking system is one of the safest in the world, right? And it's well positioned to absorb this. So you were asking about. Right before the break about the large institutions that moved money into the California bank last night. And there was some panic in California, right? And if you think about it, a whole bunch of people on the West Coast lost a lot of money in crypto, right? And then if you start worrying about your bank losing money too, you probably emotionally are in a spot where you could get really worried and do some stuff, right? Kind of maybe make an emotional decision instead of an informed decision. And I think that's what happened with the second bank in California, First Republic, right? A whole bunch of folks saw what happened at Silicon Valley Bank, which was a bank run, right? And we hadn't seen a bank run in this country in decades. Yeah. It was an old fashioned get the money out of the bank, right? They saw that happen in Southern California, Silicon Valley, well, nearby in Silicon Valley. And they went to the other bank in San Francisco and started pulling money out of that bank too and depositing in other institutions. And so sort of what's happened here is those institutions have decided, to help the bank, the second bank in California that's having problems, we need to put some of the money that was taken out of it back into it. So they have enough liquidity to meet their borrower needs. So it's just, it's an interesting thing, but it's it's sort of a good example of the industry's looking out for itself in this right now, trying to help support the industry to keep it solvent, which is important. But again, that's very localized to the California economy and tied deeply into the tech sector.
I was just thinking when you were saying that, thank God we put all of these checkpoints in place since the last one, because when you start going back to, everybody points back to the bank run on It's a Wonderful Life and Jimmy Stewart. But in those days, and even later, we didn't have Twitter and Instagram and all that, where the fear is almost instantaneous. It can spread like wildfire. And if we didn't have the FDIC out there for 85-90% of the people who have less than $250,000, it would be sure chaos. So we are fortunate
exactly
in that
right.
method.
This is the first ever bank run that was caused in part by social media, right? And the technology we have now to allow people to move money around is amazingly efficient. And so if you get nervous, if you look at the speed at which money was pulled out of Silicon Valley Bank, it was something like $4 billion a second, which is mind blowing, right? And so
$4 billion a second.
It was something like that. Yeah.
Wow.
Right.
Yeah. All right. So Jeff and Brenda want to ask this question, and I think this is the number one question, because everything you hear from some, and I'm not saying that from the black helicopter people, but there are a lot of people out there worried. What's going to happen now as far as the advent or the march toward a government digital currency?
Mm-hmm. So that's a bit of a separate issue. That's called a central bank digital currency, and the Federal Reserve has been thinking about that for a while, as has Congress. And our argument, the industry argument on this is we see no business case for a central bank digital currency. It doesn't solve anything that the U.S. dollar can't already do. And so why make that investment, which could potentially weaken the U.S. dollar, right? Why build a competitor currency to the dollar? That seems short-sighted to us. And so then you have to ask the question, well, why are the people in Washington that are pushing for it? And, well, they want to keep up with China. China has one. Well, just because China's doing something doesn't mean that America needs to. That's my short answer on CBDC. If you talk to any banker in Mississippi, they're going to tell you they think it's a bad idea, and we're vocally opposed to it when we meet with folks in Washington.
Gordon, how does this differ from cryptocurrency as far as the digital dollar? I mean, is it just it's a card where there are no pennies, there are no dollars, anything else? It's all digital.
Yeah, other than it would be right, and it would be a competitor to Bitcoin and a competitor to the U.S. dollar, because it would be essentially a Bitcoin issued by the Federal Reserve instead of by the miners that are generating the blockchain supporting the Bitcoin. And so, to me that adds, especially now after what has happened in the last 5 days, that adds another layer of risk and complexity to the system, and that we don't need to be dealing with right now.
Yeah. Is the argument on digital too? And you hear this, that the government would control our spending one way or the other. In other words, they just like these autonomous cars, everything else. They have the wherewithal to says, no, I'm sorry, we double check your credit rating, and we want it to be a couple of more points higher before you buy this.
Right. I think so
we're losing control of our own money.
Right. I think that is the argument and the concern, particularly with a government-backed digital currency, right? Because if you think about Bitcoin started as a way to, it was sort of developed as a way to avoid deep government oversight. And that has some positives, but has a lot of negatives too, right? Bitcoin has been used an awful lot to fund, there were hackers that stole billions of Bitcoin in December. And then we know now that turned around and made missiles in North Korea, right? And there was a guy arrested in Miami earlier this year. He was a Russian guy who was running a crypto exchange in South China, and he was funding the Russian military through skimming off the top on crypto. So the business case for digital currency, whether it's Bitcoin or a central bank digital currency, is speed, right? It's the ability to do something quickly. But the problem with crypto and Bitcoin in particular is that it evades all of the safety measures we have in place in terms of illicit finance. So it makes drug smuggling really easy, and weapons really easily, and things like that that shouldn't be easy.
That's exactly why the drug cartel now they've got the money to hire some of the brains, regardless of what nationality they are, and I think they're going to become big players in that whole especially if you find a way to launder some money, and that's number one. Thomas says, how are our banks immune from federal rate hikes devaluing their bonds?
Well, they're not, right? The federal rate hikes are going to continue, and bonds are going to continue to devalue. The answer to that is, what is the bank doing to plan for that, right? And it was clear at Silicon Valley Bank they weren't doing anything to plan for that, right? And like I said earlier, the banks in Mississippi have been planning for that since last summer, and they continue to adjust and plan, and it becomes an aspect of balance sheet management, Paul. And the other thing that hasn't gotten a lot of coverage in this, there's been a lot of talk about the failure, but this week the Federal Reserve stood up a liquidity facility. So instead of that allows banks to pledge their bonds that might be declining in value as collateral for liquidity, and hold the bond to maturity, so they ensure they don't lose anything on that bond. And that gives them an option to cash out the bond without actually cashing out the bond, so they don't take the loss. which is a really, really good play by the Fed. I think that backstop, I don't know of any bank in Mississippi that needs to use that, but sort of knowing that backstop is there has been a very calming thing for the market too. That was, I think, a really good tool. So my point is there are a whole lot of tools out there, and banks are really studying them and using them and doing their best to help their customers take advantage of all of them.
It is amazing. I was just thinking about this. It is amazing that there was one of the big wigs in forming the SVB bank didn't have only one person had some financial experience. I think is one of the things I heard. So here's a group of people that did everything they possibly could in the banking industry wrong as far as their formation and their practices of wokeism. Let's see. I got a couple of other questions here. We got one final segment. Can you hang on for another segment?
Sure.
Okay, one more question or two from with Gordon Fellows, President, Mississippi Bankers Association, when we return right after this. Let me try is it working now? Did I put the quarter in here? I was going to say, did we devalue the airtime on this one? I think we got it now. My final question was this. What has this done or will do to things like 401ks, pension funds, PERS, all things like that? Will this have a ripple effect on that, or just it just depends on the market?
Yeah, I think it depends on the market response, and I think a lot of the market response is really what does this do to the Fed's plan to continue to hike the interest rates, right? And you might see some pop in the market if it looks like the Fed's going to reduce, but you might continue to see some loss in value in equities if rates keep going up for a little while longer. I don't know that. I'm not a financial advisor, but I think the market response to this is partially tied to whether or not this has an impact on the Fed's rate hike plans. But Paul, go ahead. Sorry.
Just one other point here. We would like, as just regular consumers out there, not in the financial business, to have some modicum of faith or confidence that, regardless of who's in office, Republican or Democrat, in the White House or in the Senate or in all of these positions of power, would not use the financial system for political gain to try to increase the polls when they're down. Will we ever get to that? Because it seems like the interest rates were held down a long time for political reasons or reasons for some of the donors or whatever it happens to be. But is there a point that we could do that? Is there a way to insulate that from almost like the Supreme Court?
Yeah, well, the Fed is supposed to be independent and act outside of political pressure. I share the concern you're raising, particularly as it relates to regulatory swings, right? And as one administration might ascend, regulatory expectations may go one way, and then as that administration leaves and a different party takes over, the swing shifts, and that is a challenge for banks, right? The regulatory goalposts continue to move, and that's a difficult thing to work through. But the good news in Mississippi is our banks are really good at it here, right? In 2008 and 2009, the crisis was driven by mortgage issues, right? And there were mortgage failures all over the country. We didn't have a single bank in Mississippi fail from a mortgage issue, right? So our banks are exceptionally well managed. Our customers, I think, have a lot of trust in our industry, and that's really important. And the banks in Mississippi do everything they can to prove value to their communities and to earn customer trust every day. And I don't, back to the first question you asked, or is this all over yet? The market is going to continue to fluctuate. The stock market is, in part because of all of this. But our banks are really well positioned to absorb everything. And at the end of the day, for everyday Mississippians, the best place to keep your money is in an FDIC insured account, and take advantage of that.
You would think we'd have learned things from back in the days of Dodd-Frank that you were alluding to. I remember some of the stupidity on that one is it was wokeism back then. You wanted to make sure everybody, regardless who it was, and certainly in the civil rights movement and beyond, that if anybody wanted a house, if it was a $500,000 home, one way or the other, find a way. And I remember reading one story where, if you couldn't get them to qualify, if they were on SNAP or at that particular time, just regular food stamps, didn't matter what it was, if you could get them up to be able to afford that house. Well, in many cases, they did, but it lasted maybe 2 or 3 mortgage payments, and it collapsed. But, I mean, it was all politics back then, and you think we would have learned something. Final thoughts, sir?
Yeah, Paul, I appreciate the opportunity to come on and talk about this. It has been an interesting week in terms of the media and the press coverage. But every bank I've talked to, other than maybe for an hour and a half Monday morning where there were a couple customers that called and asked questions, it's been a business as usual week in Mississippi, right? Yeah. And I think that's a good thing. And I think it's a testament to our communities, right? The folks in Mississippi, and we're not a panic state, right? We go about our business day to day. So while there's this Twitter contagion spreading and people panicking on social media, Mississippians are just, they're taking care of their business, and banks are continuing to support them. And I want to thank Mississippians for not falling for taking the bait, so to speak, of social media angst, because there's here no reason to worry about it.
I want to thank you and some other folks who came on, and it was good for us to be able to use this vehicle across the state with our coverage to let people know, and the more they knew, I think the better off they got as far as confidence that some of the things that caused this were stupidity in California that doesn't exist here. So that made them even more confident, and it was good to use this tool to relay that confidence across the state, and with the help of people like you. Gordon, thank you, sir. Appreciate it very much. Have a great weekend.
Thanks for the opportunity, and happy St. Patrick's Day, everybody.
I think you got some St. Patrick's coupons there wearing green this morning, so
trying. Yeah, that's right.
Let you know that. Thank you, man. Appreciate it.